Hey everyone, welcome to Community First Financial Ed. I'm Chris. Today, we're going to talk about responsible borrowing. So I've broken today's lesson down into 4 parts, and the first is applying for credit. Now most people don't know that when your credit report is checked, even when you're the one checking your own report, an inquiry is added to your report, and it can affect your score, and that's a big sad face. So every time someone looks at your score, it affects it. You need to keep that in mind next time you're comparing interest rate at multiple lenders, because all those lenders are going to check your credit and therefore affect your score. And that brings us to the next part of responsible borrowing, paying on time. Paying on time is generally regarded as the single most important factor to a good credit score. Paying on time proves you're responsible and that you have, are, and will pay back any debt you have, which is a smiley face. Now, so if paying on time helps you get a good score, you might be wondering what a good score really is. So let's talk about your credit score. Now there isn't a standard number that lenders look for, but there is a range. Most lenders view borrowers who have a credit score of 700 or above as a low risk and will give those individuals a lower interest rate versus people who have a high risk and a low score, which kind of brings us back to the smiley faces. The flip side of having a good score, which is your happy face, is of course having a bad one, which is a sad face. So most lenders view individuals with a credit score under 600 as high risk. High risk borrowers won't qualify for low interest rates or the other incentives. If anything, they'll pay a high interest rate and be denied altogether, which kind of brings us to the next one, which is your future. So what does this mean to your future? Well, with a high credit score, you'll get a great interest rate on loans and save you some money. If you have a low one, you'll have trouble getting a loan for the things you need or want. So let's just recap. Every time your credit is checked, it's affected. If you pay your bills on time, you'll keep your score in a good standing. Your credit is your credit worthiness, and it will affect what interest rates you pay. Thanks for tuning in. Hope you learned something. Again, I'm Chris, and we've been watching Community First Financial Ed. Catch some more episodes on Facebook or the Community First YouTube channel.